What's up, guys? It's November 22nd, 2023. Happy Thanksgiving. I hope you guys are going to eat a lot tonight and you're spending it with family and friends and having a good day. Just going to make a quick breakdown because I'd be pretty surprised if someone is watching this on Thanksgiving. We had another range day. It was a pretty slow week because of Thanksgiving. We have Thursday and Friday off, so short week. I'm down like $60, but that's the best I've done in this type of environment. Usually I'm blowing accounts out left, right, and center, so I'll take it. I'm not happy with it, but I'll take it. Yesterday's price action was almost the same as today in terms of buying low, selling high. There was not too much money to be made after the opening move was put in. It sucks we had two gap up, big gap down, big gap up. I think that ate up a lot of the range. So yeah, we're still kind of bullish. We're not kind of. We are bullish. We've been chugging. Really tough bull trend to hold. Deep pullbacks could be getting weaker. Today's price action, nothing exciting. If you missed the morning move, it was tough to make some money. I missed the morning move because I'm sitting out the first couple bars. However, so big gap up, with continuation. Bar 1 shows bulls are buying high. Bar 2 has good follow through, and bar 3 is bad. Really bad follow through. Doesn't mean we're bearish. We could just pull back and go. We had a day similar that had a huge gap up about a week and a half ago, and then 2 legs down, and it trended for the rest of the day. Bear bar at highs after big gap up. I saw this and thought about going short, but there was news within 10 minutes, and with the big gap up, it was kind of a hard trade. But if you got short here, this led to a profitable 2 legs down into the EMA and tagging yesterday's high, which is pretty cool. If you caught that, that was the move of the day, in my opinion. So here's that falling wedge into support. Bulls are buying. Bears try and go for a new low and ultimately fail and close back up at their open. So the price came down and went up. There's good momentum here for the bulls. I had a buy stop order set right there and I got filled and went for 2 legs. I got out on this bar. I'm trying to figure out a better way to take profits in ranges because I keep getting out on down bars or like up bars, and like if I'm getting filled on a buy stop, I get out here. It's only a couple points, so it's almost double. Like from if I get long here to here, and there's almost double. So that is a lot of money on these type of days to be sitting. Let me get on with the price action. I'll talk about this. So wedge bottom, 2 legs up, double top. We came up to this bar's 50% level. I was playing with the range fibs today, trying to create. I didn't set any limits, but I did save myself some money. I'll show you guys in a second. 200%. I did that for the 50%. I just want to see where the 50% level was. I'm going to do 50% of the big bar. Oh, and for the record, this is also leg 1, leg 2, leg 3 fails. And this is what I want to show is that this bar would have sellers sitting at 50%. It shouldn't even really get to 50%. A good trend stays around the 33% level, I think. From what I'm starting to understand, a stronger trend won't really retrace 50% of the way. Later in the trend, the pullbacks get deeper, but for the first pullback, you really don't want it to go. If it trends, it trends, I guess. So what I'm trying to get at is bulls do not close above the 50% level. We get a strong bear bar, and I think bears short this back into the EMA, and they get trapped, and bulls get a few legs higher. I count this as 3 legs. 1, pullback, 2, pullback. Here's like, actually, let me rephrase what I just said. Now I'm talking about it. This is 3. This is a wedge top here, but it had a bullish breakout and it failed. So we're trending above the EMA for a little bit, and when this bar got put in here, that's when I used the fibs today as the range fibs, because we are clearly range bound. We were range bound yesterday. We were range bound today. I hope we're not range bound next week. I need to see some green. I'm tired of my live counts being in the red. Anyways, so now that I'm looking at this looks like a gap up wedge bottom bull flag with this, so this would be the pull, and the bulls keep this gap open, and there is this bear gap open up here. So gap up, wedge bottom bull flag, breakout, spike, deep pullback, and then they trend higher. Once we see this deep pullback, our PT is here, and then here, and then if it's a strong breakout, we go for double the range. This range was pretty small, so I think it was okay to look for an 18 bar range breakout, or we could have done it like that too, just to, because that is the previous range. And then the deeper this pullback goes, okay, hold on, this is something I saw on YouTube by another price action trader that studies Brooks, and he was saying that, so let's say this is the bar, right, and the deeper the pullback is, the less upside it will go. I'm thinking about that in today's situation because it makes sense from two different ways. So we have a deep pullback, right? So to get this deep pullback, the bear bars have to get put in. So not only do bulls have more ground to cover, they've got more eyes working against them. And that was kind of the gist of it. Like a 33% pullback has a better chance of going higher than a 50% pullback has a better chance of going higher than a 75% pullback. And we can go completely to the bottom, be 100% pullback, and not even make it to the top, but it would still be a pullback. So this makes sense that we had a super deep pullback to about 75% of the range between. So this is the range I'm looking at, this bar with the gap up. So if this was here, actually I want to show this cleanly. So this range from here to here is 100%. I'm eyeballing this. 30%, 50%, 75%, or I mean it would be 25, 50, 75, 100 from the way down because we're measuring the pullback, right? I'm going to do something, but I don't want to delete these levels. I'm going to do it because why talk about it when we could just be accurate? So measure this. But the gap up is 33 points. 33. You guys about to see my horrible math skills. Divided by 4. 8.2. So we go up from the low here. No shot. Look at that. You see? Holy crap. You guys saw that I just like... We just did this together. 8.2 lines up right to the bottom of this wick. So that's exactly what I'm trying to get at. This came back at 75% of this pullback, so the chances of it breaking out are less likely. Doesn't mean it won't happen, it's just less likely because bulls have more ground to cover. And speaking out loud, since this pullback took 75% chance, there's more eyes on this. That's what I'm trying to say. There's more bear eyes on this. So not only do they have more ground to cover, they also have more eyes working against them. Went a little bit off topic, but this was a crazy, it worked out. You guys saw it to the, well, not to the tick. I mean, it went like one tick below, about 8 points. And this is just all rough measurements, but there it is. There's the math. That was by another Brook student. That video's on YouTube, and I can't remember. I've watched so many. If it's an Brook student and it's on YouTube, I've probably watched it. A legitimate Brook student. Some of them, I don't know. Okay. Anyways, let me put the EMAs back up. And there was one more line I had here. Range bound fibs. I had the range bound fibs up, right? So one thing I was really trying to respect is the do nothing zone, which sucks because I was getting FOMO and I missed this breakout because I got out here thinking this was a wedge top, or I don't know, I just got out here because I was thinking we're going to sell because it's having a hard time against these bars. So I missed this breakout, of course. Second leg down, I buy this, I got out, I got short here, and I got these two legs down, I got up here. And what sucks, what I was talking about earlier in the day, how I got out here, same situation here, I got out, and this is not a lot of room for error the rest of the day, and I got stopped out here, but I reversed with one contract and made most of it back. I finished the day up a little bit, so I got stopped out somewhere and got kind of annoyed. Maybe I got stopped out here. Yeah. When I got long, I didn't hit out. Got stopped out and I reversed and then made it back. I hit out. I don't know. I must have got out. I get long here. I got out around here because my stop was here. I must have got out later. I must have thought I was getting out here, but I got out as the market was moving down because I got annoyed in this area. But it doesn't really matter. So 3 pushes up, breakout, wedge bottom. I did buy this because it was close enough to this level. This is the buy zone with the 33%. And yeah, buy the close. I sell out around here. I have to check my trades again. These last couple of range days have really put me in for a spin. Hope you guys are managing better than I have. I'm gonna wrap this up because I've been going back and forth with it. Bulls get 2 pushes up and a third leg fails into the upper half of the upper third of the range, and that's a sell back into the EMA. The market starts to consolidate and we get a tight trading range, so it's best to wait for a breakout or 2-bar follow through. I was long here and I got out and just reversed because this was a very strong breakout bar after all this. I had a feeling we would at least get a measured move, and I caught with 1 contract, which sucks because that would have made up my P&L today, but I kind of chickened out. And this was a 2-hour move, so that was a great move by the Bears. So yeah, 2 trades. I think this breakout trade, and if you were sly enough to catch this, those were the 2 trades in my opinion. This is not a bad long, but I don't know. This is good too. Not the best trade of the day, but it led to a profitable trade. And the markets just went range bound. This is about 30% range. Looking into the daily chart, I almost deleted this, then I forgot I was talking about it. So they already broke out. The channel is gone. We can see it better on the hourly chart. Bottom of the channel, up, and a bullish breakout. Not very good continuation. Bulls would want to see this as a strong bull bar, maybe something like these bars, but it got really weak continuation. On the daily chart, there's starting to be an upper wick. So, yeah, upper wick, high of the range, 3 pushes up, wedge top. This is kind of a bear trap, it's looking like, but if we look at the inside of it, it actually doesn't look that strong. And I think we closed below the EMA. Barely. We closed on the open. If we close on the open, how did the daily chart? Okay, I don't even know. I'm missing something here. We didn't close on the open. Oh, the gap up. It's the gap up that gave. It's the gap up. So yeah, because that body must be something like from here or something, and then this is the wick, and this is the body of the daily chart. You guys see what I'm saying? So, because remember, we're trying to read price action, multiple ranges on multiple. What am I trying to say? Multiple bars on one chart. So this is how the daily chart is looking like. And then the wick would be here to here. And the wick goes in the middle. So about 10 o'clock PST is the middle. Yeah, right there, that's 10. Yeah, and this is just, I do this not this in depth, but just so we can both see what's going on here. Close enough. Do you guys see how we just, oh my gosh. See, this is the daily bar, and then this is the wick. So this wick is this candle, which is this move here, and then this body is pretty much this entire gap up. Which if you count the gap up, this is still kind of bullish. We can check the daily chart and let's see if this candle closes above 50% of its range, it's a trending candle. If it closes below 50% and has more wicks, it's a trading range candle. Let's see something here. Okay, so it did close above the 50%. 12 points. I really don't know if this matters, but I'm just trying to get more and more fine-tuned with whatever I can. It worked maybe it doesn't work here, but it worked when we measured this. That was actually really crazy to see. So 19 points, 14, 13 plus 4, 7, 17.75. So it pretty much is a trend. It's a trading range bar because the wicks are almost 20. 19.5 is almost 20. I'm saying it's a range bar because we have been ranging. The price action was range bound. It may look like a trend bar, but we traded price. The internals were very like rangy. Obviously, bears and bulls clearly made money today. So yeah, man, that is that. I think I'm gonna stop rambling. I hope you guys are studying and applying things and making money. Last thing I'm gonna do is update the weekly chart with you guys so we can go into next week. I don't know if you guys actually copy these at all, but if you do, if one of you guys decide to copy that, this is how my daily chart is gonna look, and then I'll copy these over to the 5-minute. I'm gonna do it right now. I'm just gonna do it so we can just be on the same page starting Monday. I'll be posting shorts. I really want to post some of my trade breakdowns, but I've been so wrapped up with my family visiting, and I've been looking for a weekend job because I want to see how I would trade if I wasn't relying on trading income. So I'm looking for like a easy part-time weekend job, and no one's hiring. No one wants to hire for part-time. They're hiring, but they want me to work trading hours. So this is what I'm looking at on the daily chart. It's the weekly levels. Oh, I messed this chart up. Hold on. Our week only had 3 trading days, so it's pretty tight. It would be nice to see a breakout or breakdown regardless. We are really extended away. We have a pretty small bar. What did the bar look like? It is follow through though, not the best follow through. We had a big bar, big bar, little bar. So maybe next week is a big bar. Who knows? This is a nice wedge bottom with follow through, but I think there has to be some sort of pullback, and this week is small enough and rangy enough that maybe bears see this as money value is what I wanted to say, but I don't really trade like that. One more thing. Okay, yeah, so I'm gonna copy this. Okay, let me make this the 15-minute chart. I'm gonna drag this up, drag this here, and then I've been starting to trade like this more and more, and it's helping a lot. Just have like very simple levels that are easy to understand. So let me change the text style. Bottom. Last week's high and today's high are the same level. Obviously I'll be looking at this tomorrow, so tomorrow will be yesterday. This here, 50% level is intact. This here. Okay, yeah, so this is what my chart's looking like going into next week. Let me save it. I always keep the 15-minute up next to me. We're sharing the same high. 50% level is right below today's low. So maybe we tag the 50% and bounce it for bullish, and this is below of this week. Guys, have a happy Thanksgiving. Turn on the notifications. I drop these videos every day at 3 p.m. Hit the follow button, hit subscribe, tell your friends to trade price action, use your stop loss. Have a good night, everybody. Bye.